AMD finished the week trading at about $167.76, which puts it down a few dollars from the midweek high near $184, but still firmly in positive territory compared to where it stood just a few weeks ago. It's worth pointing out that Friday's action saw a gain of just over 2.5%, even as broader tech stocks wavered. That tells us investors are still positioning AMD as one of the central names in the artificial intelligence and semiconductor story. The pullback from $184 to the high $160s may look significant on a chart, but it's more consolidation than collapse. Stocks that run hard in a short period of time need to catch their breath. AMD had surged earlier in the week on optimism around its revenue forecast and its growing role in AI data centers, so some profit-taking was almost inevitable. What matters is how the stock holds up after the initial rush. In this case, the fact that AMD found support around the mid-$160s suggests buyers are waiting for opportunities to step in, rather than abandoning the trade. Part of the resilience comes from real fundamental progress. AMD's latest quarterly data showed strong gains in both PC and server markets. In PCs, AMD's unit share rose to nearly 24%, up from just over 21% a year earlier. On the revenue side, the shift was even more impressive, climbing from about 18% to almost 28%. The story is similar in servers. AMD now controls 27.3% of server units, up from 24% last year, and when you measure by revenue, the share jumps to more than 41%, compared to around 34% previously. That revenue share figure is particularly important. It shows AMD is not only shipping more chips, but it's selling higher value, higher margin products into the most lucrative segments of the market. These gains are coming directly at the expense of Intel, which has struggled to keep pace in both performance and cost efficiency. For years, Intel's dominance in servers was untouchable, but AMD's EPYC processors have now become the preferred choice for many enterprises and cloud providers. The narrative of AMD as the challenger is increasingly giving way to AMD as a co-leader, especially in data centers where demand for AI compute is exploding. That brings us to the AI story. AMD's guidance for the third quarter came in stronger than analysts were expecting. Management is projecting revenue around $8.7 billion, versus Wall Street's forecast of closer to $8.3 billion. The difference might not sound dramatic, but it signals that demand from AI-driven customers, companies like Microsoft, Meta, and OpenAI, is accelerating faster than the market had built into its models. These companies are racing to add compute capacity, and they aren't putting all their eggs in Nvidia's basket. AMD is winning orders, particularly for its MI300 and upcoming MI350 series accelerators. At the same time, the stock did see pressure in after-hours trading when management noted that U.S. export restrictions to China could shave as much as $1.5 billion off 2025 revenue. That's not trivial. China is a massive market for AI hardware, and restrictions complicate the supply picture. But it's also important to view this in context. The company is still growing overall revenues, still guiding above expectations, and still gaining market share. The export issue is a headwind, but it hasn't derailed the broader trend. This tension between growth opportunity and political risk is likely to be a defining theme in the weeks ahead. On one hand, AMD's products are seeing greater adoption globally, which fuels a bullish case for long-term investors. On the other, tariffs and licensing hurdles could weigh on margins and delay some of that growth. Traders will be watching closely for any new commentary out of Washington or Beijing, because a shift in tone could trigger volatility across the whole semiconductor sector. Looking at next week, the key for AMD will be whether the stock can hold its support levels and start to rebuild momentum. The mid-$160s have emerged as a stabilizing zone, and a pushback toward $170 to $175 early in the week would be a constructive sign. Investors will also be listening for analyst updates. Any price target hikes or bullish notes highlighting AMD's market share gains could provide fuel for the next move higher. Longer term, all eyes are on AMD's upcoming Analyst Day in November. That's when management will have the opportunity to provide deeper detail on its AI roadmap, its ROCm software ecosystem, and customer traction. If Wednesday's rally showed anything, it's that investors are eager for more clarity on AMD's role in the AI revolution. Analyst Day will be the stage to deliver that message. Between now and then, we're likely to see the stock swing between bursts of enthusiasm and cautious pullbacks, but the overall trajectory remains one of growth and competitive gains. So where does this leave us heading into the new week? AMD is a stock that has absorbed political noise, faced export restrictions, battled fierce competition, and yet still managed to grow faster than many expected. It has outperformed broader indices on strong trading days, and even when it cools off, it finds buyers at support levels. That kind of behavior is characteristic of a company that the market sees as essential. If you're thinking about the week ahead, the focus should be on three things. First, can AMD maintain stability in the $165 to $170 zone and build from there? Second, will we see continued positive commentary from analysts and institutions reinforcing the bullish narrative? And third, does any new geopolitical development emerge that could shift sentiment? The answers to those questions will likely define AMD's trading range over the coming days. But stepping back, it's worth remembering the bigger picture. This isn't just about week-to-week swings. AMD has moved from being an underdog to being a market leader in multiple key categories. It's gained share against Intel in both PCs and servers. It's becoming a credible alternative to Nvidia in AI accelerators. And it's projecting stronger revenues even with export restrictions in place. The stock may be volatile, but the direction of travel is unmistakable. As we go into the new week, the tone is one of cautious optimism. Cautious, because policy risks and market volatility are still factors. Optimistic, because AMD has shown time and again that it can execute through challenges and deliver products that customers actually want. Investors will be watching closely, but for now, the story of AMD holding strong and looking ahead to more growth remains intact.